Pass me the rum. The geek could find somebody who could play the steel drum. So if you like to speak, then everybody dance with me. We got the legs to the left, fellas to the right, and everybody's faded at the tiki out of night. We all wanna dance to the rhythm of the beat. I would drink Bacardi by the unpopped flame. If you know where you can find me, I'll be unwinding down, down, yeah, lose track of your time. Grab a drink beside me. Down in the fire, down in the fire. You got me, no, it's a condition, no. If you're looking for relaxation, you pick your destination, my location. If you really wanna know where you can find me, I'll be unwinding down in the highlands, down in the highlands. Sure, sure. Lose track of your time. Grab a drink beside me. Down in the highlands, down in the highlands. Where you can find me, I'll be unwinding. Down, down, down. Lose track of your time. Grab a drink beside me. That highlands, down in the highlands. Children slide across, skipping just like the stones of the road. One sails going across the river, skipping it knows just alone. With the sunset, rise, not so far behind. To give us just the light to lay it down. Under the stars, listen to these translations. Stories across the sky. To yes, winds of the blasting on the wind. Round and nothing ever feels the same. Shade that under the tree. We go back, same rain clouds we more to the brightness. Stars and bears chasing the day away. We find stories every sentence in this was that love fade. No circuit breakers again. No limit moves.
Who's really running this market?
Just
Good morning, everybody. We haven't started yet, but we're about to. All the news out there. I just need to make a couple more adjustments before we get started with the news, and really no economic reports. It's kind of hard to navigate. But we'll find our way around. 1 second here. US dollar is dropping like a rock. Yeah, I should have stayed in my gold. I got in gold earlier this morning and already locked myself out. Made a nice little profit. We are seeing about a 1% move across the board. The Dow still has a lot of move to go up, so a lot more lift on that. So let's get those. See if I can get everything lined up here before we get started here, top of the hour. Good to see everybody. It's going to be a pretty interesting day. I really want to catch the top up here. I'm bringing up some Fibonacci price extension lines, especially when we start getting to new all-time highs. The Fibonacci price extensions are really reliable. That's why I'm plotting them out to find a place where we're going to look for that short. It looks like we have a confluence on the Dow. Dow is going to be a little more tricky because it does have and need a little more upside just to catch up. So we'll kind of wait for confirmation on the Dow. But, and I'll do the rest one in just a moment, but I want to give you, before we get started here, $71.40 on the S&P, 71.44, that range right there. That's where I'm anticipating the price turn on the S&P. Things to keep in mind, today is the 14th consecutive, well, right now we're looking at day 14, and I do not expect today to end positive. Okay, I actually am anticipating a down day today. So at some point in time, we're going to be looking for a big tail. Okay, and I'd like to get the top of that tail and utilizing Fibonacci price extensions. 71.40, 71.44 is that targeted range where I anticipate the turn. Now, with the markets moving up as we see them right now, this is a massive short squeeze. Why do I say that? Well, look at the volume on the Dow 30 stocks. In order to sustain the S&P futures up at this level, the Dow 30 stocks are going to have to make a big change. And look at NVIDIA, only 2 million shares traded on it with a move like this on the S&P. Okay. Very light volume. This is a negative divergence. But we're not going to try to pick the top here because this is where we'll see, basically we're looking for another little squeeze as we get closer to the open. Okay. So let me bring up our prep here. The news, there's a lot of breaking news that has come out utilizing financialjuice.com, stuff about the Strait of Hormuz. You know, you're not going to change the direction of all those tankers from other countries that are in the Gulf of America. It's like if they were on speedboats, yeah, you could change the direction real quick. But these tankers are all en route to the Gulf of America to load up on oil. Okay. So this is a lot of hype. Okay. Kind of like buy the rumor, sell the news. Now, I was also mentioning that yesterday was the 13th up day in a row. Okay, extremely rare to have 14 sessions, and a high probability a price will be coming down. So what I'm looking for is that opportunity, okay, for a potential short. Now, that doesn't mean this is going to be a correction, okay? Doesn't mean the market's going to correct and start a reversal because we don't start a reversal really with one tail. Okay. And I'm just looking around. I heard something over here. Wow, nice job, Candlestick. Went long. And, yeah, don't fight that trend. And locked in for today. Good. Yeah, good. Nice way to start the week or to start a weekend. Yeah, take the money out and go spend it. All right. Um, At any rate, again, as we were saying, don't fight the move. Just prepare for the buy the rumor, sell the news type event. Now, there's also been some other things that we're going to go out and look at. I do, and before I go any further, I do have an open order on the S&P, currently up there about 71.41 area. Okay. I may get a little squeeze on it, but that's the range I'm looking for, that potential reversal. And the reason behind that is that futures, especially S&P, NASDAQ, Russell, and the Dow, okay, they're derivatives. They follow the cash market. Right now, the cash market is not fully open and it is on very light volume. And as we look at the number of Dow 30 stocks, we have 17 positive, 1 negative. 16. 16 times 2 would be 32. Cash equals 32. S&P futures are trading at 56. Okay. So S&P futures are overbought relative to cash. This was an extreme move to the upside on the S&P futures, but the stocks and exchange traded funds are not reflecting the adjustment. So the futures will have to come back lower in order to balance out with cash. Okay. So I'm not looking for a reversal at this point, but I am looking for a place where as we get closer to the market open, futures and cash will have to, well, futures will have to catch up with cash, and cash is way down about right now. Cash is right there about 7,100. Okay. So the cash value, about 7,100-ish. And this is why we look at futures versus the cash. Okay. And we look for the futures and the cash to balance out. Okay. Looks like we're starting to get a little more of a squeeze up here. And you'll notice that each time price makes a new high, the volatility picks up because there's a lot of people still trying to short this top, okay, or this move. Okay, so we have the S&P 7140, 7144. NASDAQ just hit the first level, 26,742. Okay. Now you should be able to do pretty good even if you just take one micro. Okay. And you notice that we've had 1, 2, 3. This is the fourth gap up on the Qs. Okay. So I'm going to toy with this just a little bit, starting off with one micro, just keeping my position really small because there's a lot of potential in there. Okay. One trade I'm going to look at selling short is up here at 26,818. And this market is just ripping. Let's see, I'm gonna come in here. I'm gonna sell short, right? Oh, we just got the S&P. Massive squeeze. What's it gonna do there? Nope. I need to reverse that. I was on the wrong side there. There we go. Now keep your stop. We'll catch it if it turns over. Right now, this was a projected area. Okay. And if price starts to roll over, or sorry, if price stops us out, we'll catch it as it starts to roll back lower. I'm going to come in here, buy stop, about 71.46. Let's get back over to the NQ. Notice the percentage that we're up. Let's get the Dow set up. Fibonacci price extensions are really good tools to use. And we're also noticing the range, the Globex range is wide. So we're looking for the bull trap and the bear trap.
Order filled.
Wow, just a massive squeeze. So as we're watching, the prices just rocket to the upside here. Let's make a reference right back to the S&P. Okay. Volume is still pretty light. Okay. So that was our projected level. The markets are still pushing that squeeze for sure. Oof. New highs, new highs. But the stocks are still not reflecting that move. Okay. I did get stopped out, and I'm going to be looking for that It just stopped out because I wasn't going to risk more than a certain amount on this. For confirmation, we need to take out one fair value gap, an upside fair value gap, and create a downside fair value gap for this. Okay, so just kind of mapping out a couple there on the 5-minute chart. And if we're looking at the map, we can see that the Asian and part of the London session, or the Asian session for most part, was accumulation. And we're looking now at manipulation here on the for the London session. Now distribution should take price back below the accumulation area. And we look for that leg base, just below that level. Now, if you can imagine what the daily chart will look like if that comes into play, price coming back down to this level here, okay? That would be a big tail, okay, with a red candle at the top, which would be a kind of a bearish sign or a sign of profit taking. All right, let's get over NASDAQ. Now, we may still have one more squeeze around the open, okay? This is just pre-market activity right now, and there could be another little push. And it looks like the NQ daily chart hasn't broken the all-time high yet, so let's target these levels up here for just after the open. That final little push. Okay. Crude oil. Ooh. Well, that's a good sign, and as we look at crude oil, we have to ask ourselves, why is our state still raising oil prices? I mean, we're over 20% down off the high, and this week prices have continued to go up, even though crude oil prices have gone down. Kind of interesting, isn't it? Just need to make a little adjustment there. Now, you may spend a little bit more time this morning just making some quick adjustments. And another thing I do want to point out, okay, at 7%, we did not have a circuit breaker or limit move kick in. The next circuit breaker or limit move is supposed to kick in at 13%. We have not seen from the CME, Chicago Mercantile Exchange, the CME, we have not seen them exercise limit moves or lock limit moves on the big price swings of crude oil. And this is something that we have to note, because those limit moves and lock limit moves are very, very important to keep an orderly market. Okay. And it's like they just left and they just kind of let everything go the way they wanted it to. I also want to point out, look at this nice fair value gap trade entry. Now, I didn't participate in that, but you can see that the picture is just perfect. We had the 3-candle pattern, price came back up, hit the proximal line, and it just plummeted. Okay, so a very good example of the fair value gap in play. Okay. Okay, and looks like we're starting to get a little bit moved. We still have about 15 minutes. We want to see if there's going to start to be a turn on the S&P. Excuse me. Price needs to take out an upside fair value gap, create a downside fair value gap. Okay, then that will be a little more confirmation of a potential turn. Okay, and this is an extreme move. Okay, crude oil, natural gas. Woo, what a move on gold. Wow. I left so much on the table in that. All right, we have our exhaustion gap, and look at that, all-time high. This was the 7,000 or 770, 707.55. That was a projected move. Okay, it's also when we talk about the how the gaps work, breakaway gap, measuring gap accounts for 40% of the estimated move. And then we have that final exhaustion gap, which we're seeing on at Russell, and we're seeing it on the Qs, the SPY. But not yet on, I mean, we're seeing the move gap, yes, but we're not seeing that the Dow has made all-time high. Okay. And let's see, how do we do with Bitcoin is getting ready to come into a nice pocket of points. Kind of like a lot of things are coming together right now. The other thing that I'll mention is, if you follow, you know, there haven't been a lot of arrests as far as the corruption or the fraud, waste, and abuse, or maybe there has been, and it's just not being publicized yet. But that usually is pretty bearish for the market when they start making a bunch of arrests. Okay. Now, I don't know if you follow that type of stuff, but there's a lot of people that have not been held accountable for certain things that have been done. And as we saw with the Fed chairman and how Trump went after Lisa Cook and some of those things, that every time he mentioned something negative about the market dropped. Okay. So even though some action might be taking place, it may be a little more bearish for the market. Okay. Wow. With the US dollar dropping, that took a launch and took out a couple of zones here on the FX markets. Of course, heating oil and crude oil making a significant low. Kind of messed up all my charts there. Dow took out that one. Now, as the markets approach the open, we're going to see an attempt for cash and futures to balance out. Now look at all this Bitcoin moving up. I think there's going to be a stampede for people to buy U.S. Treasuries here once the war is done. Keep talking about the hottest country in the world, things are going to be, people are going to want to get involved. Okay, so on the S&P, we have taken out one fair value gap, the upside one. Okay, and then we're going to wait for a downside fair value gap to come into play. Just really take note of the volume. Goldman Sachs up 14 bucks on 15,000 shares traded. Yeah. We got about 8 minutes before the market open. And I'm expecting another little squeeze back to the upside. Okay, so the indexes are going to be the hottest thing to watch for. Wow, look at NQ just turned right off of that. Now I've been advocating kind of waiting, but did anybody take the short off of the that NQ area? Just looking for another squeeze. See, even Aunt Martha out there right now is looking for a short. So the more people that are looking for a short opportunity off of this move, and they know that the volume was extremely light, okay, the more we're going to see another squeeze to the upside. Okay. And we want to catch this move. Oh, we really want to catch it. Okay, but it's going to take a good tradable entry. Okay, so we have taken out an upside fair value gap and on the Russell have created a downside fair value gap. When you start studying the fair value gaps and where price changes direction, okay, very often the peak or low is in a leg base, but we don't have a leg base up here to get the absolute turning point. So we have to wait for some confirmation of a potential turn by finding and recognizing price taking out an upside fair value gap, creating a downside fair value gap. Now, the location of where the downside, in this example, the downside fair value gap is right at the same level as the upside fair value gap. Okay. So you will in time find that if there is a, let me see if I can do that example here. So we have price coming up, and as we're starting to look for that turn, if there is no leg base, okay, let's just say this is an upside fair value gap, so I can give you a better example, okay? Now, where the downside fair value gap is created will have an impact. If it's above the upside, if it's at, or if it's below, okay? So that location of the down, looking for the turn or looking for the opportunity is where did that downside fair value gap. Now, this also works the inverse. So if you have a move down and price starts to move back up, you have a downside fair value gap. Okay, if there's no leg base at this area, then we need to see where the upside fair value gap comes into play. Was it below? Was it at? Or above? These are things to watch for because when we get to a point where we're looking for a small move versus a big price move, okay, where does that opposite direction fair value gap come into play? Once it takes out one, is that the better entry? Okay, so that's what we're looking for. And we're right 3 minutes away from the market open. And in this example, we took out the upside, we created a downside, and it's already been tested. Okay, so this one was at, and we're getting a pretty good move. Okay, S&P. S&P took out the upside, and it's right at that level as well. S&P on a 5-minute chart, we would look for that entry and utilize a protective stop loss. So price bouncing back up 71.35. We have one down stock negative over 94 cents. We have 20 positive. Let's see, 21, 20. So 19 times 2. Looking at 38. Cash and futures are balancing out pretty quickly. Nobody took the short? Hmm. That was a pretty massive move. Now I am expecting and going to go back and start utilizing uh, basically the 5-minute chart. Okay, price took out, and you can see that the upside and downside fair value gap were even. Now, what reason I'm looking at that is because I want to see if that fair value gap is going to be more reliable if it's equal versus above or below. I'm not sure why this always happens here. Right at the open on a Friday, everything likes to lock up. Yeah, my data might be a little bit off here, so rely on your data. I'll let you know when I'm setting up a trade. So what we're looking at this point here is how reliable is the fair value gap when they're even, okay? So I'm looking to see if I can trust it because my stop is going to be pretty far away, and I do expect one more squeeze to the upside. All right, let's get back over to S&P. And there goes the Dow. Ooh. This is go back high. Okay. Might get a little pullback on the Dow.
Order filled.
Small stop. We'll give it about $100 worth of risk at this point. Getting to an extreme here. All right. So one of the things I also mentioned, just kind of waiting at the moment, is utilizing that first 15-minute candle, but also recognizing where that liquidity trap could be on this little open range breakout type strategy. Okay, so we want to find the Globex low and the Globex high. Okay, and that first 15-minute candle is still forming. And very often, when we take that Globex high, price likes to do a little liquidity sweep. Okay, so we'll look for that little area just above the Globex high. And we still have a few minutes before that first 15-minute candle comes into play. Looks like the big move on crude oil is kind of basing at the moment. That gas. Yep. So So far that SPY is holding. Come on, Bitcoin, break above it, break above it. I can, let's see. Coming back to that, when we are utilizing the fair value gap strategy, okay? Sometimes we like a little more information about, I mean, because when you're checking it out and verifying the information, there are market conditions that work a little bit better for the reliability of that. And often when we're looking at that overnight high or that overnight low, like right now, I'm not anticipating a break to the downside yet, okay, because markets are moving up. But should that first 15-minute candle complete, I would anticipate, if it completed right now, okay, I would anticipate the breakout to the upside, and I would utilize a profit target area just above the Globex high. Kind of like doing where the markets like to do a little bit of a sweep, okay, kind of squeeze it, that final squeeze out. And that's also the other reason that I'm pointing out, oh, look at that, we just missed the S&P, didn't it? Okay. Let's stick to one thing here. We still got the NASDAQ. Russell. And this is why I was pointing out, okay, the Russell just came back up, also hit. Okay. So I wanted to see if when the upside fair value gap was taken out, is it more reliable to take the trade entry if price returns to that fair value gap? Or when it's even, does price often go through it? Okay. And that's what we're studying right now and what we're looking at. And it's for a short-term trade, we're still waiting for it to play out. Okay. There were some unfilled orders around that area, but I want to observe it to see if that is the place where we can have a reliable, stronger downtrend or stronger uptrend. So what we're investigating right now is when the fair value gaps are even, is this more of a short-term trade, or should we be looking for a long-term price movement? Okay. So far, it's looking pretty good. We've gotten about a 2-to-1 move off of that. Okay. We still haven't completed that first 15-minute candle. Got about a 3-to-1 move off the S&P. Okay. And the Dow is just still pretty messy. Okay. Right now, we're starting to see the cash and the futures are starting to balance out. Okay, so let's go back and look at that opportunity here. So volume is still fairly light. NVIDIA did pick up. We have 3 Dow stocks negative over 94 cents and 22 positive. Okay, so that still puts us around 19. 38. So cash equals 38. Futures are trading at 50. The S&P futures are still overbought relative to cash. You need it to close below the fair value gap on the downside before placing the sell order. Okay, that is what we're trying to discover at this point. Okay. what we look for, if you want to set the trade up ahead of time, is, we can see that we had that 3 candle pattern to the downside, okay? Price did come back up to the proximal line, okay? Now, I want to see if that one, because the fair value gap is even across the board, okay? Do we just get a 1-to-1, 2-to-1 trade off of that? Okay. Or does price go back beyond that level and hold, or does it go above? Okay. So your question as far as placing the order, of course, I missed that short-term entry, is I want to discover which one is more reliable for what I would like to see is this move down. Okay. Now, the evidence we do have on the price chart at this moment is that the fair value gaps were even, and we got a 2-to-1 move off of that range. Okay. So that's a fact. Now, I want to see if this is going to be reliable for giving me the big move, or is price going to come back up, make a break above the high, do a little liquidity sweep, and then start coming back down. Okay. See, what we're trying to do is kind of dissect which picture on the price chart is going to give us a much better, reliable trade entry for the maximum profit potential. So if we're looking at just a short-term move, we can say, yeah, let's just get a quick retest, boom, we're out 2-to-1, 3-to-1. We're happy with that because of what we're discovering, and we don't stay too long. Okay. I've been notorious for staying too long in a trade. Okay. Hoping for the bigger move. But as we start digging into more of the details, what can we learn about the location of the fair value gap relative to the prior one? So the current one we're looking for a trade on, okay, what can we learn about that? And that's what we were doing here with the Russell, is saying, okay, if it's even, is it good for just a 2-to-1? What should my expectations be? If it's the one below, okay, is this one the better one for the bigger move? Okay, more aggressive move. I don't know the answer to that yet, but I am posing the study of it. Okay, as we can also see on the Russell, when it was even, we got this a small move, and we're not going to stay too long. I mean, that's just one example of many that we still need to dig through. Okay. Hope that helps. And thank you for the question. So, all right. I didn't even have a chance to get these ones here. Let's go back to the 15-minute chart and see how this one's going to work out. Okay, so we have completed that first 15-minute candle for the open range breakout. Okay. So if you're going to look at that open range to the upside breakout, we may set our profit target above the Globex high. Okay. Now, this is a different strategy. Okay. And that what we see and have documented more on this, let's just see, 71.35 half. Let's set that trade up, break out to the upside. Okay. Target just above the Globex high, 71.50. Okay. Along the way, we can look to take a 25% move of that open range 15-minute candle. So we got Uh, Judge. Now I'm just incorporating in the liquidity sweep if the price does break out to the upside. You're looking at basically maybe 100% move with that first 15-minute candle upside, and then look for that short there. Probably a lot more people want to take the open range breakout to the downside, but then the liquidity sweep would be very, very low. Okay. So again, what we're doing is looking at the aggressive, the potential trade opportunity, taking the breakout to the downside, looking at for target 71.15, so about a 4-point there. I do have a trade set up for the breakout to the upside. Okay, looking for one last squeeze. Okay. I'm not trying to be too aggressive right now for the downside because it could whip right back up against me. And that's what we're trying to discover a little bit more with the Russell and the other equity indexes by recognizing, do we get a small move off the one that is even, or do we get a bigger move? We're still in observation of this. Okay. See, that's what I was afraid of. There's a lot of traps right now. And I'm not quick enough because if I have a target, I may be stubborn to hold it, and now I'm getting my squeeze on there. That's just driving me crazy. And now my whole mindset is on the wrong side of potentially a really good trade. I'm just sitting on that squeeze and potentially a stop loss at the high of the candle, but I wouldn't be willing to go long. Okay. So we'll see how this plays out. And we're still utilizing that first 15-minute candle for the open range breakout. Okay. Bank index, gap up, pulled back. NVIDIA is still climbing. Apple. Now it's going to be pretty tough to take a trade long. And I'm staying on the simulator now. My other account is flat and I'm blocked out on one of them. And I have another potential trade on one, but I'm kind of saving it for a better trade opportunity. Now, I am more bearish on this, okay, simply because what I'm expecting is yesterday was 13th up day in a row on a daily chart. It's extremely rare to have 14. So I am looking for this last little squeeze to the upside, then the opportunity to go short. Our Fibonacci price extensions on the S&P, oh, we've taken them all out. Let's go to the NASDAQ. Yeah, we're still looking for a potential squeeze, and we have our all-time high on the NASDAQ daily chart, which has not been breached.
Order.
Yeah, Agreed. On which one? Still hasn't closed below. Which the in Q or the ES? On the ES. Okay, that's a 20-minute. Look for a profit target 71.51. See if we get a little squeeze above the that Globex high. I'll just hit the reverse button. Now, one of my deciding factors about taking the open range breakout to the upside versus the downside was the location of the Globex low versus the Globex high. We were closer to get a liquidity sweep above the Globex high versus a liquidity sweep below the Globex low. So that was one of the things that with trading the open range breakout is locating where the Globex high and Globex low is and saying, well, which one is closer to do a squeeze or a liquidity sweep? And in this case, it was closer to the upside. Now, 25% of this range is where I have first target 71.39, second target 71.43, which is 50%, and this is a 100% move, 71.51 area. It's how do you refine your strategy? And that's one of the things we look at. I mean, it's a very simple strategy, open range breakout trade, but what are some things you can bring in as additional odds enhancers to help you assess which direction are you going to be more bullish or more bearish in? Now, on a smaller time frame, utilizing the fair value gap, okay, which like a 5-minute chart is that we saw that the fair value gaps were even, and we got a nice 2-to-1, 3-to-1 type move away from that level. Okay, and I believe on 5-minute, back here. Now we have taken it out. Okay. So we took out the downside, and as we took out the downside, we have not yet created an upside fair value gap. I know this is pretty torturous, you're expecting a big move lower, but we need to move higher before we get that lower move. So if you did take the open range breakout to the upside,
Fill.
this is where you're looking to take profit. 25%, that's a pretty high probability. Next level, 71.43. And we're looking for that 71.51 as where I'm going to look for hitting the reverse button. Am I doing this right, team? I know you guys play this little strategy quite often, and I don't know if you're using the Globex high or low, but you have seen a lot of success with the with this little trading strategy. Oh, and want to give a special shout out, everybody. It's Harvey's birthday. Harvey is our one of our admins that takes care of us and makes sure everything is running smoothly, posts our videos, and does a lot of stuff behind the scenes. So I want to say happy birthday to Mr. Harvey. Okay, so first 15-minute candle is 50% of the move. Okay. So am I just trying to make it more complex using the Globex range? All right, approaching 50%. There we go. Come on, squeeze them out one more time. Squeeze them out. All right, 71.51 half. Okay, I got 71.50. And I'm just gonna double down on that one here. Okay, so I'll close out my long at 71.50 and also execute this short. Did anybody take that? It was a tough choice to take that. It's almost like going against everything that you see, but anybody take the trade long at the open range breakout, 71.35? No brave souls out there, huh? Interesting. Just come across another. Israel will not be bombing Lebanon any longer. What is nuclear dust? Interesting. Well, there's a bunch of Trump tweet. Come on, break that high. Give us their entry short. That ought to freak a few people out. Talk about nuclear dust. What the heck is that? Created by our B-2 bombers. This deal is no way subject to Lebanon either, but the USA will have separate work with Lebanon and a deal with the Hezbollah situation in an appropriate manner. Israel will not be bombing in Lebanon any longer. Come on, squeeze it up there. Just a little bit more, a little bit more. All right, going to see a quick little squeeze to the upside. Probably running the stops of everybody that's short. Come on, come on, come on, come on. Yep, yep, yep. And just another mention, okay, is the timing of that report came out just after the top of the hour. So whatever's here in the headline or whatever here that Trump said, okay, will come out in the headlines in about 11 minutes. Okay. So if you're looking at the timing of that, okay, it's going to take about 11 minutes for mainstream media to really expand on that. We're just almost there. Don't miss us by a tick. So far to one tick. Come on, one little pop.
Order filled.
All right. I came in just a little bit early, but we achieved that, and we're looking for that. We may have to take a little squeeze on it. Now, one thing that's this is 100% move of the open range candle. Okay. And what we're looking at now is if we're going to get that aggressive move lower, let's go from high to low right here, and we'll look at the 113 extension. Now, Mastering the Charts Part 2, we talk about the 113 extension being a momentum reversal. Okay, and we're right there, 151. Oh, you guys were trading the NQ. The S&P hit 100%. Nice job, Mr. B. All right, so we have the 113 Fibonacci price extension, which is very common with what we're looking for in a momentum reversal. And one of the things, reason I might be looking for that momentum reversal is the wording of that. What is nuclear dust? I don't know what that is. Next level up will be the 127 and 1618. And then we'll look for the counter move respectively. Stocks are slowing down. Okay, so we start the process again. We haven't, let's mark our upside fair value gaps. We still got a minute for this next one to form. And a big reason I have the timer per candle on here is to see how much longer I have to wait for that fair value gap to complete. So what we're looking for, and what I have marked on the chart right here, and let's just use some colored boxes at the moment too. We have an upside fair value gap. And potentially one here. This one hasn't completed yet. Still got about 40 seconds. So what we need to see is a upside fair value gap get taken out, and then a newly formed downside fair value gap. Okay. Now that's just using kind of that reversal. Now we do not have any leg base group of candles up here to anticipate the reversal. Okay. And as we locate where we are on the map, okay, we're in an extreme area of manipulation to the upside. I came in a little bit early at 71.50. And we still got 4 minutes before we have a downside. Are you guys picking up any useful tips, any information that to help you assess your trading plan and what your trading style is? I'm trying to be as descriptive as possible here, utilizing the fair value gap techniques. And when we start to look for that potential turn in price, okay, an upside fair value gap has to be taken out, and a newly formed downside fair value gap needs to be created. And what we're looking for is, where does the downside fair value gap get created in this example in order to get a very long, longer running trend? Okay. What we have witnessed this morning was that when it was even, we did get a 2-to-1, 3-to-1 move. Boom, nice little trade. Okay. But then since that, it has gone through that level. Okay. So as we're now we have a new upside. And we want to see the relationship of the downside fair value gap. We have one that's potentially building right here. We're still about 42 seconds from being completed. Now, another question is it better to take out two fair value gaps and create a downside one? And then if there is two, then where is the downside fair value gap? Okay. See, all of this is helping us train the eyes in what to look for. Okay. If we're going to expect a reversal or a change in direction, what is going to bring that into play? And since we are at all-time highs on the indexes, okay, we don't have the leg base to work with. In fact, it's way down below at the origin of the move. We still should be trading this to the upside. I mean, if you're a trend follower. Chevron down almost $9. One Dow stock negative and 23 Dow stocks positive. 23 times 2, 46. Cash equals 46. S&P futures are trading at 74. S&P futures are overbought relative to the cash market. So now we're going to start to look at the relationship here of, will price take out an upside fair value gap and create a downside one? And that's when we start looking for the turn. And we're still looking at this as a potentially a momentum reversal. And the news headlines should be coming out right now. Yep. There it is on the quarter hour. President Trump prohibited bombing Lebanon. Okay. So some of the bigger news places that came out, I mean, FX Street came out first. They won't be coming out till the bottom of the hour for another 15 minutes. Oh, China Post came out. Okay. Things are starting to shift a little bit. I mean, notice the momentum is slowing down, okay? People are just looking for a reason to take a profit on the long and scared to death to take a short without a little commitment. So we don't have any commitment to the turn yet, other than our speculation using a Fibonacci price extension. We're still holding that 113 extension. The 113 extension has a very aggressive move lower. We call that our momentum reversal. Even utilizing Fibonacci measurements, projections, and structures, okay, they're all well and good, but you still have to have a way to execute on the trade. Often while you're learning the different measurements, you're you still don't know how to get into the trade or what you're looking for. Okay. So our projected move to the downside, 7106. $70.93. Look, it lines right up with the leg base at the bottom at the origin of the move. So we have projections. We have a map, what we're anticipating, but now we're looking for where do we have a way to execute on the trade. And what type of, I mean, the maps are great, okay, and they teach us a lot. They teach us price patterns that have happened in the past, okay, and the measurements are also an additional confirmation of that. But it still boils down to how will you execute and manage risk. The more you study the left-hand side of the chart, okay, and we still don't have the downside fair value gap yet. Okay, we touched it once and then went deeper into the zone. Okay, now generally with a fair value gap, once it's touched it once and it does not lift off, comes back and goes deeper, I'm unwilling to take that trade. Okay, it's usually just a quick retest of that area. When it comes back in about halfway, it has a tendency to fail. Okay. Now that's just my observation. Not 100% of them fail, but most of them do. Okay. But I still don't have a downside fair value gap to enter the trade and manage my risk. Q is getting a little top heavy. Still no downside. We do have a lower high, almost a double top with a lower swing high. Potentially. Dow is continuing to move up. We do have, let me double check that at 49.27. Watch the time. We're about 7 minutes away from the bottom of the hour. Okay. Another headline came out. Iran is removing all sea mines with the help from the US. Parliamentary bloc affirms cautious commitment to ceasefire. Again, a lot of this is going to come out at the bottom of the hour in the mainstream media. Okay. So we'll see how the mainstream media plays that information. Hi, Ken. Much of what I am talking about and presenting right now is outlined in our course material, Mastering the Charts Part 1 and Part 2. And a great deal of the application of what we're doing is in our recordings here of the live trading room. Because we can teach all of this stuff and it all looks logical, and I can show you many examples of it working. Okay. And then, a student can go back and verify the information and say it works. Yeah, I like it. I see it. And it fits my trading style. Okay. Or fits the way you like to see the information on the price chart. Okay. But when it comes to the application of putting on the trade and managing the risk, okay, that's a whole nother level. And the application is, most people they get concepts. I mean, we talked about the 15-minute open range breakout trade this morning. Okay, that was a great one. Okay, pretty simple, easy concept. Okay, even showed you how to apply the trade, manage the risk, what to look for. Okay, but when you get down to actually applying or putting the trade on, there's something that kind of causes people to be a little bit more conservative, unsure. So this is why the live trading rooms and why doing live stream like this, it's like, okay, what are we looking for? If I believe that this structure is going to play out, what would I need to see in order to identify the risk on the trade and the potential targets, see, based on this structure and based on that, this is basically target one. Okay. But I still don't have a place to enter if I'm not in already. Okay. Because this entry that I took on this trade was based off of using a 113 extension, was based off of a different strategy that I believe in. Okay. Now, if you're watching how a momentum reversal comes into play and you're using a 113 Fibonacci price extension from the prior swing, and you've documented that, yeah, this is a pretty strong momentum. Okay. But you're still not convinced that it just hit the button right now. Okay. And neither am I if I'm using that strategy. But in understanding the structure, and if the 113 holds, a confirmation would be that once price takes out the first fair value gap, I need one to be created and then get in a small, because when price starts a momentum move to the downside or to the upside, we utilize a specific entry based on utilizing fair value gap. Okay. Now, a fair value gap and the leg base are ways that we apply the trade. Okay. In the application of the trade is, some things I just explained. All right. So we're about 1 minute away from the bottom of the hour. Trump. Again, this deal is not tied in any way to Lebanon, but we will make Lebanon great again. Okay. So we're now right at the bottom of the hour. We want to see how the mainstream media is going to play the information. Are they going to make it bearish? Well, bearish would help us with our trade entry that we took, and depending on how bearish will be we'll see how strong that momentum will be. Okay. So again, we just got the bottom of the hour, and we'll monitor. And I encourage you guys to monitor what mainstream media is talking about. Like your CNNs, your CNBCs, and stuff like that. Because most of them are pretty much against everything that Trump does. So they're going to try to spin even a positive news into a negative. Okay. Well, I hope you enjoyed the show. I mean, we didn't have a lot of trading to go on, but we did accurately describe the market conditions. I am looking for S&P to target the levels below. Okay, target 171.07. I do not have a way to get into it yet. Okay, other than the strategy we used before with the 113 extension. Okay, so we're waiting for a little more commitment of that move, 7,094. We have recognized that the cash market is overbought relative to the futures, and at some point they need to balance out. Okay, and the balancing out right now would take us back down to about that 7,100 level where cash and futures would be balanced. Okay, but still that does not imply that there's an entry. Okay, we're still waiting for that potential entry to participate in that. So I'm going to head over. I'll be in the background in the Discord room. I'll turn on the Discord group there. I think our link is already connected. I haven't been in the Discord in a couple of days, so I'm going to go back in there, and we'll be hanging out. So I wish everybody a good Friday. And what do we got going on here? 1 second. Oh, we do have Mastering the Charts recap and review coming up a little bit later, and in about an hour's time. So we'll continue there. Now I won't be sticking around if All right, we'll see you guys in about an hour. Have a good day. Bye now.